Hey, what's going on, guys? Welcome back to Way Up Trading. Today we had a fantastic day in the markets, taking a look at a couple different things that we did today, playing the upside moves with the PCA data that came out today, which wound up being a little bit more bullish on the charts wise than I thought it was originally. That came up early morning today at around 8:30 a.m. Eastern Standard Time, and the markets responded positively to it. We're able to jump on some big plays that took place this morning, including Google, Apple, as well as a SPY to the upside. We're able to pull in some good returns to the tune of 100 to 200% per play. We're going to go over the charts, take a look at some of the setups that we actually were able to trade today, and take a look at what I expect for us going forward in the next couple of days right after this.
Manhorn stock market.
All right, so right now I got the chart pulled up for Apple. Apple was actually a really nice play today. We were able to make some great gains overall. Called out the whole thing on Twitter today. Hopefully we're following me. This is a 0 DTE call for today's expiration date. Nice play, entered in really well based upon the trend that we were seeing over the last day or two, and it wound up being a nice banger. Entering the 175 strike for 0 DTE expiration, which wound up going about 100%. You can see this is the 5-minute chart here for the last 2 days. Once we got this break above the 400 moving average, or the smooth moving average down here with the retest, we were able to clearly see that the trend was still in the upward position once it broke over the smooth moving average, as well as the 200 moving average and the 200 EMA lines here, the red and the pink line that you can see here. And this is in after hours. I'm also using extended hours for clearer indication of how things are moving overall. And you can see we got this pattern, almost an N shape. This is an ABCD pattern, and we call this in harmonics. And basically it is a continuation, a bearish continuation up until a certain point where we reach that the hop area, which is the harmonic optimal price, before things may possibly turn around, bounce, or continue. And what wound up happening here, we can take a look a little closer. We made the entry roughly at about the first test and reject of the 174.71 mark, waited for it to come down, show strength just above the 9 EMA on the 5-minute chart, and made our entry here just around the 174.30, 174.29 mark, closer to about 10 a.m. this morning. Wound up playing the entire upside move all the way to about 175.60 once we got the confirmation and break up below the 9 EMAs where we exited the play. Huge move. Basically continue to follow the rules that we like to set up of momentum trading, which is 9 EMA crosses, as well as the 1348 crosses, which you can see here happened in pre-market. Things shot up really drastically after we got the news on the PCE data with the general market as far as inflation fears are concerned. Had a huge move up, caught the bottom of that move on the 9 EMA and played the continuation side of it until it broke. Great opportunity here to actually play the upside. Once it reached that area, it basically just played support right up on the optimal level here at about 174 and change, and kind of traded sideways for the remainder of the day. But again, if you were able to follow us on that play, you did pretty well on this one. Obviously Apple's a great company, but we were playing the charts as we see them, and the opportunity was there. The rest of the market had been running off of some great news, as well as what's still happening with the semiconductor sector and AI, as well as what's happening with Tesla with the approval on the FDA for their Neuralink program. So the market was a hot location today. There were some big plays that were taken there. Hopefully you were scouring the market and took some opportunities if you didn't take any of the ones that I mentioned on Twitter. But again, if you're not following me on Twitter, that's one place you can go ahead and make sure you follow me in order to pick up opportunities that come up. Link is down in the description. The next play that we took that was high quality was Google. Google did about 101% on the day. 0 DTEs were also entered in this morning for the 124 strike. We took that call basically with the basics of how we play momentum trading. We're using our crosses for the 921 EMA, as well as the 1348 EMA that took place early this morning. We watched for the bounce over the smooth moving average and waited for price to start to continue up above the 200 moving average, as well as the 200 exponential moving average, this red and pink line here. We waited for the retest, sold off, and got a bounce above the 9 EMA, which is this light blue line. Entered in our call position roughly about 10:15 this morning. Again, this was alerted on Twitter. 0 DTE, again, these are higher risk but high reward if you know how to play the charts and know how to play the momentum. Obviously, like I mentioned before, things were going really well with the remainder of the market. Semiconductors, PCE data, and the whole nine were playing really bullishly on the charts. So we knew that the trend was up over on the overall market, and definitely were able to enter this play here at about the 123 mark, 123.76, and watched the crosses and just rolled this thing all the way up until about the 124.85 mark, just before it broke down and broke below the 9 EMA. This was again a total of about 101% return on investment just by understanding the momentum rules as well as following the supports and resistances here. Just for further confirmation, a couple other indicators that we used to make the determination that this was a good move. We watched the MACD here, which basically showed us that we had green continuation, which you can see this histogram had flipped from the red lighter bars into the green, as well as the cross up above here, the signal line of the MACD. Cross the signal line and you have upward momentum showing that this is going to continue. All went along with our entry here roughly at about 123.76 and rode this thing all the way up to about a 124.80 just before it started to break. We had our JS trend candles, which are these red and blue candles here, a little different than your normal standard red and green that you would normally see. The blue shows us continuation in the momentum and basically rode it all the way up until this red bar started to print, and we had downside wicks that were starting to show up just about here and push back towards down towards the 9 EMA, and exited the rest of our position right in this area here off of last runners before it started to break down completely. You could have held on a little longer and gone a little further, but with 0 DTE or same day options, it usually is a little risky to hold on the pullbacks because they can lose value very quickly. So we want to play the one side move in those cases. Use our gains if you wanted to go in and go longer dated after you take your gains or whatever the case may be. If you have available capital, you could have gone and played this a little differently for a different strike price, maybe a little bit further out, and then got the rest of the move just to be on the safe side, but still playing the idea for your entries as well as taking your profits as you go along. You could have done that. However, that wasn't the play today. But either way, money is money. You made your profits. Hopefully you were able to get in this play, but the rules still continue. Continuing on here, you got the crosses of the MACD, you got your crosses on the RSI here above the signal line, and it's continued to play all the way up until the break. As you can see, this dotted line that I have here, this vertical dotted line shows you the break of the MACD, and you can see the histogram lightening up. You can also see the break of the RSI, the purple line crossing over the yellow line to the downside, which also shows that this was an indication that the price is going to come back down. And one other indicator I like to use for my entries is the KST, which is down over here. It stands for the no sure thing, and basically confirms my entry point right here. It's a momentum indicator that basically shows that there's a continuation to the upside or downside once this red and green line cross above each other. Green basically means you're ready to go up. The cross back over means you're ready to go back down. Now this KST never crossed to the downside fully, which could have told us that there was going to be more continuation. But again, you want to be very safe with your exits and entries on same day contracts because again, they can lose value very, very quickly based on theta decay as well as the directional move. So be careful doing that. If you're playing 0 DTEs, Fridays are just pretty much a kind of day when we try to play those options because they do have a higher risk reward return on investment if you know what you're doing and how to play the game. Safer options would be the 1 week out as well as closer to the money strikes. So that's basically Googl, giving you an idea of the indicators we use on those as well as the entry points and exit points there. And again, money in the bank. Follow the steps, follow the rules. Anyone can do it. And lastly, profit right before 11 o'clock, 11:30, and was able to go ahead and take a break, take lunch, hang out, and come back for round 2 later on in the afternoon, and was able to do that today with SPY. And the SPY was basically the same concept. We waited for our proper entries, took the opportunity as it came along, and also a good one. Took some of the profits or the bank profits from earlier on and was able to go ahead and start to play a longer position, roughly at about the 1:30, 2 o'clock area before entering the trade. Wound up playing this, watching the trend. Obviously, the trend was up, as we mentioned before with the other tickers. Trend was upward. Things are going really well throughout the day. I mean, this thing really rocketed from open after the information that came out with PCE data, and we got a huge move to the upside on high volume retest of a trend that we've had for the last 2 days, and this thing just continued to melt all the way up before it found its top from the lows of about 415 open all the way up to about the 419 mark before a retrace, which is a huge move. I didn't catch any of this move at all this morning. Wasn't looking to play that. Was looking more so to play some of the other ones I mentioned earlier on, which were very, very juicy. So took those instead. However, I did pay attention to what was going on with the broader market. Huge moves happening all over the place between SPY, QQQ, which was on a complete mission to Mars, and SPY wound up being the simpler play to pay attention to because it would have been a little chasey to go into the QQQs at that point. Couldn't really tell where that was going, so the safer move for me was going to be the SPY. Wound up going ahead and playing this downtrend, and we were able to see that we had a falling wedge that was actually playing out after we got the highest move of the day. We went and made a second attempt for it roughly around a little bit towards lunch or after lunch was over, and volume started to play up and down on this falling wedge. You can see that the volume started to fall underneath the signal line here, and was waiting for it to go and retest the uptrend that I have here, this white line you can see here. Waited for the retest and made my entry just around this area. Entered in the 420 call option for May 30th, 2023. More expensive, but also closest to the money, in order to pretty much guarantee that we're going to be able to make a profit on this thing based upon the rules that we follow. You can see we got this bounce off the line, this trend line I mentioned, as well as this blue line, which is the 50 moving average. You can see that these two candles wound up being a tweezer bottom to signify that a reversal was coming. So you can see here closer in, my JS trend candles flipped from red to blue, or we're starting to. You get the outlining of this, and once we broke up on the 9 EMA, I actually entered in a little bit more. My position started to scale in further because I knew this was going to continue, and it did just that. We broke through this resistance mark that we actually could formed earlier on in the day, which is this pink line here, and we're able to play this all the way to the upside to my mark, roughly around the 420.72 mark, where we exited the majority of position, and we're able to close out just before the end of the day once we broke the 9 EMA somewhere around 420 and 20 cent mark, and just let the rest of it ride and close out our position while paying attention to see if there were any end of day pops. I did enter into a 0 DTE YOLO at the end of the day just for fun. I wound up not going through because they did flush it toward the end of the day. A lot of profit taking went on toward the end of the day. Obviously, it's going to be a long weekend and whatnot. So they flushed it and it was all good. I was willing to let that go just for fun. And that's pretty much how the day ended. But overall, we had a solid close on the SPY, pretty much right on the nose at 420, which I thought was hilarious. And it's almost like we're living in a simulation, but what are you going to do? This is part of the game. Let it be. So either way, we're back into the daily chart, taking a look at this pattern we've been forming and been playing for the last couple of days. You can see that we are still within this broadening wedge, or this broadening top pattern that has been playing out for the last couple of weeks since about the early parts of April. We played tops and bottoms throughout this. A, B, C, D, E. We had a partial decline here on this uptrend, which is this white line that I have here. This uptrend is actually from way back when we had our 379 bottoms and have bounced off it on this partial decline. Being that we did break this 2008 trend line, bottom 2008 crash line that we talked about on the last video, or several other videos, also mentioned on Twitter. This line has now been broken above, which was sitting at about 418.75, and now we have closed about 420. So I do start to see us retesting this line and start moving back up towards the $430 mark or 433 mark over the next couple of weeks. So that will confirm to me that this is in a bullish pattern, and it looks like we're gonna get a little bit of a move, but we'll see. I mean, a lot of things can happen over a long weekend. We'll see how things wind up playing out and take it from there. All right, taking a look at the 3-day chart. Taking a look at the SPY here, we have our next resistance areas and support areas I'm looking for us to eventually break. After breaking this yellow line I mentioned a second ago about the 2008 crash line, if we can go ahead and break above the 420.72 mark, find support, maybe trade sideways a little bit, we're looking to continue on and pretty much ride this line all the way up, potentially breaking it and taking us up to about the 433 mark, which I have here as a target 2 off this large pattern, which is a deep crab pattern, which is a bullish sign. Now, I would see this being the top before potentially breaking back down and start playing these support levels, trickling back down all the way into the mid 410s, possibly even a little lower, maybe back to 404 at some point in the future down the line. But right now, as far as it stands, we are crossed over all our major supports, major EMAs, major moving averages. This is the 400 moving average here, the orange line. Crossed this, which was a huge resistance level for us. And right now, to say the most, things look bullish. So we'll keep a lookout on the SPY, see what's happening with the overall market. Long weekend coming up. We'll pay attention to that. I didn't hold anything over the weekend, but we do have volume starting to decrease. So we do need to pay attention to this. That volume is a little bit decreasing on the way up, which is usually a reversal sign. So we pay attention to this. Most likely we'll start to see rejection at this 430, 433 mark. So we'll keep our eyes peeled on this whole thing. But for now, hopefully we're able to take advantage of all the opportunities that were out there to make some money this week, all the plays that were out there. NVIDIAs, the AMDs, the semiconductor areas were hot. The SPY, the QQQs, there was tons of opportunities to play the momentum trades and take advantage of making some money on some of these option plays. Hopefully you were able to get in. Please go ahead and follow me there. My link is down in the description. I post a lot of high quality plays, hoping that you can make some money on the next ones around. And if that button below is still red, go ahead and click that. Like, comment, subscribe, join us on the way up. We're gonna be here every single day, growing our portfolios together and making the outcome income for 2023 and going forward. Like, comment, subscribe, and I'll look to see you guys in the next video.